Friends, greetings from HSBC Mutual Fund. It has always been our endeavor to bring innovative investment solutions to investors that help them in creating wealth. True to that idea, we are proud to introduce the HSBC Focused Equity Fund, a product that has the potential to outperform with a concentrated portfolio strategy. Unlike diversified funds, a focused fund holds lesser number of stocks, reflecting high conviction ideas. We have seen a number of events which have led to deep equity market corrections over the past 20 years. But we have also seen equity markets recover post such corrections, which mostly get converted into significant gains over the longer term. We should remind ourselves that such equity market corrections provide one of the better opportunities for longer term investors. Indian equity markets, the BSE Sensex Total Return Index, about 38% from the top of January 2020 till the bottom of March 2020. But with the support of global market recovery, Indian equity markets too recovered smartly to show the overall correction of 22% by the end of May 2020 since the January top. The current rapid reversal of the bear market has led many investors to label the stock market action as irrational. But we view it differently. Equity markets are forward-looking, whereas economic data is lagging. Second, economic relief packages and policy support has improved the near-term outlook for the economy by cushioning this contraction. At the same time, a new set of reforms announced would help ensure growth over longer periods. These have lifted investors' mindsets. We also believe that significant drop in equity markets offered and still offering good investment opportunities for the long-term investors. What is a focus theme? Focus theme essentially is investing in limited number of high conviction companies, and there are two aspects to the theme. As per SEBI regulations, a focus fund cannot invest in more than 30 stocks. Hence, the maximum that a scheme is permitted is 30 stocks. Typically, it would be around 25 stocks. Though there is no magic number that separates a concentrated approach from a diversified one, typically, fund managers holding 25 to 30 stocks are said to be running a concentrated portfolio. The idea is to dig deeper into the companies that they track and analyze, build a conviction behind their beliefs, and then buy the shares aggressively. There is no better time than now when we will see the emergence of real leaders who would have demonstrated their business models and their resilience. Investing fresh gives this fund the unique opportunity not available to existing funds. We will invest in these companies which are leaders or emerging leaders and have been gaining market share in their respective markets. Over the last few years, we have seen that big companies are getting bigger. We believe that this trend will accelerate due to current pandemic coupled with previous events like NBFC crisis and the government reforms like the GST, for example. We also believe that these companies can grow faster than the market and hence can generate superior returns over the long term. Hence, there is a need for a separate focus strategy. Though we follow the similar strategy in our diversified funds, because of the concentrated nature of the portfolio, at times the volatility of the focus strategy can be higher than that of a more diversified strategy. All investors may not be comfortable with this, and hence there is a need for a separate fund. HSBC Focused Equity Fund is all about investing in dominant players with sustainable profitability available at reasonable valuation. As the name suggests, focus theme is essentially investing in limited number of high conviction companies. The maximum number of stocks in the portfolio would be limited to 30 stocks, but they would be spread across sectors as well as market capitalization. We have a process-oriented investment approach, and we will be using the same investment process in managing this fund also. For our investable universe, we would focus on select dominant players in their sectors and preferably companies which are gaining market share. We believe that these companies can grow faster than the market and hence can show better growth. Conviction for us comes from our understanding of sector and companies and our continuous research on those sectors and companies. The process for choosing high conviction ideas is the same process which we follow for managing other equity funds. We then look at the universe for potential outliers. We generate ideas considering both these outliers and also based on the current dynamics of the market. Those ideas are then analyzed through the lens of our profitability versus valuation framework. Post that, we construct the portfolio based on both bottom-up implementation of stock ideas and top-down use of prudent risk control. The fund will follow a multi-cap strategy and would be diversified across sectors as well as market capitalization. Weight in any particular sector or capitalization would be a function of opportunity in that segment and hence may vary from the underlying benchmark. So to summarize, with a concentrated portfolio strategy, we are confident that the HSBC Focused Equity Fund has the potential to outperform and help investors create long-term wealth for themselves. The NFO period of the fund would be from the 1st of July 2020 to the 15th of July 2020. We do hope to get your support in this fund. This is Tushar Pradhan signing off. Stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.